Good afternoon and welcome to the Broker Action Coalition non-QM today. Today we have special guest Nick Pabarkis, Managing Director non-QM Sales over at Pennymac. Before I get Nick on, I want to introduce and thank actually Kim Nichols, Chief TPO Production Officer and Pennymac for their awesome partnership with the back and supporting us throughout the years in the efforts that we have down in Capitol Hill. We need great partners like Pennymac in order to make those things happen. I'm Kurt Stranson, Northeast Regional Chair for the back. Nick, why don't you take a few minutes and introduce yourself to us?
Yeah, thanks, Kurt. Yeah, I'm Nick Pabarkis, and I'm the managing director for the non-QM product set here at Pennymac. And we are extremely invested in this product, given these the dynamic market conditions that we're seeing. And Kurt. I'm certainly prepared to talk about what's happening now, why we're here, and what could be coming in the future for sure. So.
Awesome. Well, my first question for you is what is a non-QM production manager? What's your day-to-day look like? And what sort of market share of Pennymac's wholesale volume is your non-QM channel?
Yeah, no, absolutely. And before I get there, a quick shout out to you and to Broker Action, the coalition. I think for the folks who were on the line as far as originators go, it's certainly an unsung task to be able to advocate for the broker community the way that you guys are doing it. And so I'm currently the residential president for the California Mortgage, Bankers Association, and we work very closely with the NBA on their advocacy of efforts. And California, for better or worse, and normally worse, is ground zero for the housing market. So putting down bills like this super lean HOA and CRA requirements for independent mortgage bankers, all those things bleed into the broker community. But really, Kurt, you guys are the ones who are advocating almost exclusively for the brokers out there. And it's really cool to see because, we really haven't had a voice in that space. You guys are taking it to the next, other level. So thank you very much for what you guys are doing for sure.
Yeah, Brendan and his leadership and Rachel and others have been doing a great job corralling brokers to have a voice and a seat at the table, as we say. And we've had a lot of success over the last short period of time, but there's a lot of leadership and credit that goes to Brendan and Rachel and the team.
Yeah, yeah. Well, and you asked about the day to day. So my role and capacity is to manage this effort for all channels at a Pennymac. So we have a bit of a unique structure, and as we peel back the onion, we can get into that a bit. But I kind of have a unique bird's eye view of this thing because I'm attacking it from mortgage bankers, some of those who you sell loans to today as wholesale, TPO providers, independent mortgage banks, credit unions, community banks, along with the broker community, and structuring that product not only for traditional broker, but for a non-Del Plus, a non-Del Core, those different kind of models. So I have a real unique perspective on this thing. The reason that Pennymac is in this today is kind of a growing and changing market of the demographic. And it was interesting as you really take a look at the data. The U.S. population and a workforce of the demographic is changing. So it would surprise you potentially. It surprised me to know that about a third of the U.S. workforce is either self-employed or of the gig income. And with that said, the GSEs don't have a great answer for those borrowers, right? There are programs that can certainly help, but a lot of these borrowers that we're dealing with are premier credit quality folks, medium range LTVs, and they just can't show their income in a traditional way. And so, whether it be a bank statement programs, whether it be asset qualification, whether it be P&L structures, DSCR, which we can certainly talk about, non-QM gives those premier borrowers an opportunity for credit that they were really locked out to. It would also surprise you, because it surprised me, that by 2030, it's anticipated that half of the US workforce will be self-employed or gig income. And we're talking about the Uber drivers. We're talking about 1099 contractors who are working from home. We're talking about true self-employed of the business owners. Half of the workforce is expected to be there. So we view this as a long-term opportunity from a business perspective. And that's the reason that we're in the space.
Yeah, absolutely. As an originator myself, we have, a decent team here, about 80 something people. And what we've experienced with self-employed borrowers over a recent time is that specifically like CPAs, when you ask CPAs to get involved, write letters, verifications, there's been some memos out in that world that lenders need to do their own due diligence and haven't been as cooperative as you've seen in years before, really post-COVID when it became more prevalent. So the need for the non-QM product stack has, I think, grown, as you've spoken about here. But you're offering some other unique products that we don't necessarily see at other TPO lenders, like 5-6, 7-6, 10-6 arms, buy downs, layered entities. Speak a little bit about why you decided to get into those other products.
Yeah, absolutely. Yeah, I can go down the rabbit hole for sure. And a couple of things as we get there. The broker community in and of themselves have been great providers for non-agency loans. And a non-agency being, jumbo, closed-end second, the fix and flip, now non-QM. The reason being is that as a broker, you have a true competitive advantage in that a loan officer who works for an independent mortgage bank has one set of products, right? They might have multiple investors and different product lines, but at the end of the day, Kurt, you guys have the ability to go out to 50, 75 different folks and find a unique fit for that borrower. So it probably doesn't surprise you that brokers do a higher share of non-agency and then the non-QM specifically as they go. And when they brought me aboard to go ahead and carve out the product line, there were a couple of things that were hard stops for me. And these are things, Kurt, I think that as originators, you can kind of see if a lender's going to fake it. And I kind of wanted to see if Pennymac was going to fake it, right? And those three things are TRID, okay? On a business purpose loan, TRID rules do not apply. With that being said, I don't have a problem if a lender's using a traditional, the LE and CD to map through their process. Those things theoretically are not required on a business purpose transaction. But if you're holding the borrower to those TRID rules, meaning 3 days as far as the closing time, those kinds of issues, that's certainly something that does not apply to non-QM, right? The second thing is the licensing, right? So on a business purpose transaction, and we have a complete state, the guide around this. Many states do not require you to be licensed in that particular state to do a non-QM transaction. Okay. Non-QM defined as, a business purpose. Okay. Now, sometimes the water can get a little bit, of the muddy there, right? So really the way to think about it as an originator is if it's a non-owner transaction, right? Meaning even if it's a bank statement loan on the non-owner side, it's a business purpose loan. Okay. So that can qualify there. You normally think about that as like the DSCR transactions only, but it's not limited to that from a business purpose perspective. So it's the licensing. The third and final thing to kind of know if they're faking it, right, is the dual compensation. Okay. So go back to a before TRID, right, when you had origination points and the yield spread premium. You can do that on a business purpose loan, okay? So, which is effectively allowing LPC and the BPC on the same transaction. Now, most lenders, and us included, will have some sort of a cap on that as far as how much premium that we're going to pay. but you can get front end and the back end points on that. Those are the three things there that that are really important as kind of a baseline of, am I working with a lender who understands the model and is fully committed to it? You mentioned a couple of things as far as the ARM product lines. We offer a 5/7 and 10/6 ARM, and then the temporary interest rate of the buy downs. I think that there's a lot of different little, the niches out there. Those are a couple for us, but certainly something that we like to shout from the mountaintops as, as those can be a great answer for those borrowers for sure.
Absolutely. Your buy downs, when rates start creeping up, like we've seen in the near recent time here, become, top of the conversation again. And then one other question on the business purpose loans. Are you considering business purpose for non-occupant loans, period, or would you include that on a primary residence business bank statement loan if you're using business bank statements?
No. So a primary would fall under would not fall under the business purpose of the moniker, right? So you are held to true, income qualification on that. So that falls into a different segment, right? As a non-owner, it truly is a business purpose transaction. Now it's important to note the devil's in the details sometimes, right? You're putting together a DSCR transaction. The cash out is to put my kid through college, and I write that on the app. It's no longer a business purpose transaction, right? It is now a consumer loan that I'm using that cash for personal, right? If I'm using that cash for to buy another property, to go ahead and put it into my real estate business, that's a business purpose transaction. So you'll want to talk to your account executive to ensure that you understand all of the nuances there, and there's a lot of them, but that's just kind of one that we'll see now and again. Right?
Absolutely. And then another question I have is non-warrantable condos in general have been a real issue nationwide with the changes to insurance requirements and other items, specifically, obviously, in like the Floridas. Where is Pennymac at with their approach to non-warrantable condos on the non-QM channel?
Yeah, we actually see it quite a bit, right? Because our prime channel and our core products, we got such great market share there. What we find is that we will see a full doc great transaction that will get kicked for warrantability, right? And so we have a very seamless process where our condo department will evaluate that project for non-warrantability specs, and then give a counter offer into the non-QM space. It's really interesting, and this is probably going down a little bit of a rabbit hole on the cap market side, but I think our audience is certainly well educated, and this will be interesting. What you're finding from a macro perspective is that non-QM full doc has basically cannibalized some of the AUS of the jumbo, right? Because if you're an originator and you look on a daily basis, you see your AUS of the jumbo, and then you see your non-QM. Depending upon the day, depending upon the scenario, non-QM is a better price, right? And so what that's doing is an interesting effect that nobody thought, or some people thought, which was my full doc prepayment speeds are a lot faster, okay? So what that means is that those loans are paying off a lot quicker than expected in the non-QM security, right? So what's happening is you'll see a rate sheet, and ours included, where you will have a bank statement loan that will be priced better than a full doc loan. And you're like, why would that be? Well, that's why, right? Because at the end of the day, you're cannibalizing a little bit from your AUS jumbo. You kind of, in your pools, when you go to trade or securitize, you only want a certain amount of that, so you can get the optimum of the pricing on that when you go to trade. And then correspondingly, I can put that into a rate sheet. So we guard against that, and that's something that you get with Pennymac that you may not get with other folks, right? Which is a very robust capital market structure where we are, without non-QM, the largest provider of non-agency in the market today, meaning a non-owner second home, closed-end second, jumbo, right? That's kind of your, of the market. You put in the non-QM, all of the buyers downstream and all the securitizers are purchasing that paper. So we by the way of scale have got excellent execution, and hopefully you're seeing that on the rate sheets. There are certain places that we don't want to play, right? And I think that we're not going to apologize for that too much. And I can tell you some of the reasons why. But because of that execution piece, like, we want to be meaningful to you down the fairway, right? It may surprise you that your weighted average FICO score on the most recent securitization data is like 745. That's the average, right? Which is pretty cool to see. Your weighted average LTV, 68%. Wow. 745, 68. That's a hell of a loan, right? And those are the loans that, like, we've got very good pricing in other tranches as well. But we are kind of built for the middle of the fairway, not the fringes. Yeah. And the fringes scare me a little bit. And the reason being is that if you look at the most recent of the delinquency percentages, Kurt, on like a 660 FICO at like 90%, your delinquency percentages are above 20%. Like, 1 out of every 4 or 5 of those loans is going bad at a low FICO, high LTV. Now, I don't think I'm saying anything that's like the aha moment here, but high FICO, low LTV, good. Low FICO, high LTV, probably bad, right? And so that's the slippery slope that I think that we're dealing with. And a lot of people have a lot of scar tissue from 2008 on this kind of stuff, right?
Absolutely. It's interesting that you explain the back end of the pricing and securitization, because just earlier today I was pricing out a few bank statement loans and was shocked that they were pricing out better, and then some conforming with some lenders.
Right.
We also see when you talk about choice, loan officers and broker community have a lot of choice of which places they can place their loans. Yeah. And what we find sometimes is a lot of times places are offering product just to offer it, but they don't necessarily want that. There's a lot of overlays, there's a lot of hoops to jump through. Yeah. So that leads into my next question is, from a service standpoint, from business to business, what are your current non-QM turn times, average touch per file, versus your agency channel?
No, we've been very thoughtful about it, and we're doing significant volume in the product, holding underwriting times to 2 to 3 days. So 2 days for purchase, 3 days on the refi. Most of the time we're faster than that, but I'm in a spot where I'd rather under promise over deliver, as we're still, newer into the market. So I want to set the right expectations there. And you kind of hit the nail on the head with, like, some people offer product and they don't do it. We do too, right? Where, like, we have the no ratio product for DSCR. A lot of people scratch their head on, why would you buy a property that's not going to cash flow? It's not even a low ratio. It's a no ratio loan. There's reasons for that, right? I'm hedging on the appreciation, so on and so forth. I've got a college town that I think I'll be able to rent for more as it goes. There's a lot of different stories that you'll get, but investor no ratio is 0.29% of the current securitization market. It's under 1% of kind of the total. We offer it, people do it, but if you're in this business right now, you got 3 of the doc types that are your primary drivers. So your DSCR is probably about 1/3 of what you do. Your bank statement is probably about 1/3 of what you do. Your full doc's somewhere between 10 to 25% of what you do. And then everything else is kind of a hodgepodge, right? So you'll get your asset qualifier, you'll get your P&L products, your 1099s, your written DOEs. All those things are awesome to have and are great solutions for a different borrower type. But when you add up all of those, it's like 12% of like the total market that's being done. So you'll get a lot of emails, you'll get a lot of marketing with like all the sexy stuff, right? Now, most of the time you're not doing the sexy stuff. You're doing the down the fairway stuff. Yeah.
A great answer. And then, looking ahead into the end of 26, 27, where do you see the non-QM channel going in terms of, you gave us some market share stats where we're at right now, but where do you see it going towards the end of the second half of this year into 2027?
Yeah, I mean it's projected to be big, at least 15% bigger than 2025. In a market where the NBA continues to put out forecasting, and they've been wrong on the interest rate environment. I think everybody is, right? We all thought if you asked me 18 months ago, would interest rates be lower in July of 26, I would say absolutely. If you asked me 6 months ago, I would have said yes, But with the 10-year sitting at 470, it hit, right? And interest rates hit, on the yearly high not too long ago. Everybody was wrong, and I think this product, if it can be done responsibly, and that's kind of the important part, Kurt, and what keeps me up at night a little bit is the credit profile, right? So I guarantee you at some point, we are going to wake up in the morning and you and I are going to see an email that comes across our desk with a 520 FICO to 95% on a bank statement loan. It is going to happen. Okay. And that's what scares me a bit as far as the credit profile, because as margin compression happens and more people are in the non-QM space and people with scale, people like us, people like UWM and Rocket, those kinds of companies are doing more and more of this production because of the margin lines. I think that you're going to see the credit box expand, right? And folks are going to have to compete on product versus price. And that's something I think that we have to be very careful of. And obviously we want to be competitive, but we don't want to be doing things that downstream are going to lead to issues.
Great information there. Flipping the script a little bit, what does Pennymac look for in broker organizations? Training, guideline, state level advocacy. And then add who's the right contact if someone wants to sign up with you and get a broker package.
Yeah. We have a really unique structure that way, Kurt, and I was really passionate about it because when you take a look at the scale that Pennymac has already as the number 3 wholesaler in the space, my design was that, and obviously the buy-in from all of the executive of the leadership at Pennymac was, we want non-QM specialists on this product for two reasons. We want to make sure that your core business is fulfilled as it always has been, right? And it's probably at a place where the product is that complex that you need a credit mind around it to effectively structure deals, get pricing concessions kind of tackled, move them through the system in a way that would probably take up too much time for your core account executive. So your core account executive with Pennymac is your primary account owner. If you've worked with Joe Smith for 10 years, Joe Smith's your guy, right? For sure. But Joe Smith has a counterpart, and that might be Sally Jones. And Sally Jones is saddled to Joe and basically kind of covers him and all of his accounts. Okay. So you are welcome to go through Joe to go ahead and get signed up, go through that. You're welcome to go to our other website and obviously go ahead and push through there. But trust in the fact that we will have a non-QM expert that's all that they do. They are not doing jumbo. They're not doing HELOCs. They are only doing non-QM. It's all that they do all day, every day, servicing you on this product. And we've been met with very good results out of the gate on this. And we're going to continue to double down on that strategy.
Awesome. As we get ready to wrap up here, is there anything else you want to share, add, or say to the group?
No, I think, look, Kurt, and I appreciate the platform for sure. And, I didn't want this to be a commercial for Pennymac as much as it was informational as far as, the market goes. But we have a great value proposition, and to give, from some of the objections that you hear out in the marketplace are, it's a prime core product shop. You're right, and we do a great job at that. But we have an entire division of credit, of pricing, of sales, of fulfillment that is only focused on non-QM. We built this thing in the right way and with the right people to go ahead and make sure that we are not muddling through the water on it, so to speak. Now, we're going to screw things up every once in a while, for sure, and it's my job ultimately to make sure that it gets fixed. And if we can't intelligently tell you the reason why, then I've got more work to do on my side. But I will also say that there are great competitors out there who are doing a wonderful job, and everybody has a little bit of a different axe as far as product, as far as price, as far as they deliver, from a tech perspective and all that. The thing that you get with Pennymac is you get our scale and infrastructure, not only from a personnel perspective, but with our tech and with our AI solutions and all that. But we've got great competitors out there who are doing a wonderful job. And if you're not in this space now, you should be, and if you're not using Pennymac, use somebody else, get acclimated, and we're going to knock on your door trying to get your business for sure. So
awesome. Well, you provided a lot of great information and insight today. We really appreciate you coming on. Nick Pabarkis, Managing Director over at Pennymac, non-QM Sales. We thank Pennymac greatly for their partnership with the BAC and all their efforts supporting the broker community. For the folks on the line listening, get on one of our bi-weekly meetings, come to one of our events. We all need your support. Donate when you can, and support the broker community who's out there pounding the pavement, running up on the Hill. Brennan and his team on the legislative side are up on the Hill weekly, meeting with regulators, meeting with legislators, advocating for you. And we appreciate all your support. Thank you for joining non-QM today with Brokers Action Coalition. Have a great day.
Thanks a lot, Kurt.